Good afternoon, everybody. Today I'm just going to jump right into it. Not much of an intro. I recorded this video last night. Solar Edge Technologies. My one of my good friends asked me to review this company. Um, so I did it. Recorded the whole video, and my computer ran out of storage and didn't save it. So that sucks. But I rated the company and I gave them a 25.5. I believe all the numbers are still here. Okay, all the numbers are still here. So what I'm going to do is basically just run through what I gave them. All right. So we're just going to hop right into that and go to it. So cost of capital isn't here, although I'd imagine it is not the greatest considering it's a solar company. So I gave them a 0.5 on that just because it has to be high. Target price is over, which surprised me a little bit considering their long-term growth rate is negative 30%. That is crazy. Hopping over to the income statement, we'll check out some of this stuff. Now, you can see here they got a 0.5 on sales, zeros on everything else. I'm not really going to include the estimates, but you can see compared to 4 years ago, their sales are great. Dipped down a little bit. That's why I gave them the half a point. This year, they're supposed to be cut in half, which is crazy to think about, but apparently that's what's going to happen. In terms of operating income, again, that's kind of the same deal where it's just declining. Net income is not looking great either. Apparently, they're going to take a $500 million loss this year, which is insane to think about, but apparently that is a possibility, which is terrible. EPS has been going down for essentially 3 years now. Yeah, that's not great. And then in terms of total shares, apparently their total shares are supposed to go down this year, which is something, but also they have been not, I wouldn't say heavily diluted, but they've been consistently going up basically every year. So yeah. And you know what? I can even give this half a point only if I go, let's go into quarters, see what that looks like. Because, maybe there's some stock repurchases, maybe there's something. Um, I don't know. But total shares outstanding. So 56. Honestly, no. No half point, not getting it. Anyway, let's get to the balance sheet. So cash, I gave a half point to. Let's just see. It increased the last two years, down from a few years ago. Again, cash isn't the most important thing in the world, but also considering what I'd imagine their retained earnings are, which actually their retained earnings are positive, which is very surprising to me. I forgot about that, but that's kind of crazy. But anyway, their cash situation I really don't think is that great, only because their financials are very bad. They're going to have to float themselves with cash. Assets have been increasing, which is good, but also, according to the quarters, their assets just went down, but I was basing that off the years, which is a little more fair, I guess I would say. But again, it's still not the best. For 2024, apparently their assets are going to go down, but I'll keep it at the full point for that only because we're going off the years for that. Short-term debt is very, very minimized. Very little short-term debt. That's fantastic. They've even sort of reduced it compared to what it was a couple of years ago. But very coverable by cash. Long-term debt, again, is also fairly manageable, coverable by cash. Now, is it decreasing? Sort of. But again, when it's fully coverable by cash, it doesn't matter. So short-term and long-term should be decreasing, but again, when it's fully coverable, either way, it's not that important. Retained earnings, we already went over that. It is positive and increasing, which is, I don't understand how or why or what they're doing to be able to have positive retained earnings, but that is actually surprising. So good for them. That kind of gives them a lot of reinvestment that they can do. That could also be where their cash stability is coming from. But yeah, let's go into the cash flows. So operating cash flow, big negative from what I remember. But let's see here. So yeah, negative, drop down the past 2 years. Net investing should be negative, which it is. Apparently this year that changed, but that's kind of the estimate. So I'm not going to fully go off of that, especially for the cash flow statement where it's not as important. Sorry, if you see me looking down a bunch, which I am, it's because I'm in a fantasy football matchup right now, and it is coming down to the wire. So I am a little bit focused on that as well. But anyway, investing cash flows are negative, which again is surprising, but we're going to go with it. Financing, it looks like it's half and half, but also 650 million compared to 12 million is nothing. So financing is a 0 point. Oh my God. You would not believe what just happened in my fantasy game. I am going to win by 0.2 points somehow. But anyway, I'm still going to win. It's all good. Free cash flow is, again, going negative, big negative, even bigger for the estimate. Not great. Let's get into the use of cash statement. So it looks like you can see the free cash flows decreasing. Repayment of debt, I gave them the point for this only because they haven't issued debt in 3 years, which is shocking. But also they issued equity, so that kind of makes sense why they didn't issue the debt, but still, um, whatever. But they haven't issued debt in 3 years, which is good. That's not a bad thing. And then repurchases of stock, again, they haven't ever repurchased stock, so that's a 0 for that. And then let's get into the margins. If it'll load for me quickly, that would be nice. But sorry, again, this is down to the wire right now. I have to pay a little bit of attention to this. And it just happens to be when I'm recording this video. Net margin has been decreasing very consistently since 2017, which is not great. It's probably going to be negative in 2024. It kind of it has to be negative in 2024. But so 0 points there. Return on assets, return on equity, they are positive, but if we go into the quarters, which will ruin everything, you will see that it really isn't. So let me just see. Yeah, negative has been decreasing for a little bit too. 0 points there. And then the long-term debt total equity has actually been decreasing. Or wait, we're still in the quarters. Let's go to the years for that one just to make it look better. Has been decreasing on the years, which is not bad again. So whatever works, but yeah. So that's basically it. So 25.5 for their final score. Put them in right here. I would love to filter these by a certain way. There we go. I don't know how filtering Z to A decides to do greatest, highest to lowest, but I'll work with it. So yeah, lowest company I have rated probably will keep that title for a while, but that is SolarEdge Technology. Hope you enjoyed, and I will see you in my next video.